Looks like people are finally getting their stimulus checks, so what are you gonna do with that money? Buy groceries? Pay rent? No. Time to throw that money in the stock market. If Powell continues to print, then we better be riding his sweet, sweet stimulus. Financial prudence? Throw that out the window. In Powell, we trust. Stocks only go up. Well, I got a special opportunity for you guys today because, well, I'm special. The most special, ultimate finance YouTuber on YouTube. Number 1, subscribe. And there's a bunch of hedge funds that are about to make a lot of money on this opportunity too, but don't worry, we can still get a piece of it. And I'm gonna share this genius plan with you because you are subscribed to the Fallible family, and you know you can't get this anywhere else on YouTube. Well, maybe you can, I don't know. YouTube, it's a big place. But honestly, you don't even really need one-off investment opportunities like this if you have the right investment strategy in place, which is why we created Strategy Builder Pro for that exact reason, to help people get those strategies in place. That way, all our Fallible family can know exactly when to buy, when to sell, when to add to their stocks, when to take profits off, and everything else. So that way, if you see some special situations opportunity like the one I'm about to tell you about, then it's a nice little, extra bonus, a cherry on top of whatever you're already doing, because your strategy is already successful, you're making money. Anyway, this training program is open right now, so definitely click the link down below in the description and comments today if you want to get started improving or even building a new strategy. But it's only open till Sunday at midnight New York time, so do it right now. You'll learn more on this page. But okay, this golden opportunity that I'm talking about is actually more of a darker goldish color, like black gold. And if you're really cool and you know slang, then you know black gold means oil. And you guys know oil is in all sorts of a mess right now, right? Prices are dropping like crazy. And we talked about that in our previous videos, with the whole fallen angels thesis. I'll quickly review because this whole investment opportunity is based off of oil. So first we had coronavirus, right? And that caused demand to fall off a cliff because all of a sudden we're all quarantined. We can't move around. We're not driving places. People aren't flying. All the things that require gas and oil are gone. Business in general slows down. No one's buying anything. Not much need for the fuel, the oil stuff, the black gold. So that is what we call a demand shock. So if there's less demand for a product, then what happens? The price of that product falls, which is exactly what we saw in oil. And then on top of our demand shock, our best buddies across the pond, Russia and Saudi Arabia, they thought, hey, our good friends in the US are down on the ground struggling. You know what we should do? Kick them. So they stepped in because, their goal in life is to bend America over and make sure that we fail, because that's politics, especially geopolitics. It's all smiles in public, but then you go back into a dark room and try to figure out how to gut the other guy. So Saudi Arabia and Russia, they step in and they think, now would be a great time with oil prices already falling to increase our production. So they pump up the number of barrels that they're pumping out of the ground. So all of a sudden we have this demand shock, right? No one wants the product of oil, so the price goes down. And at the same time, we got a bunch of oil. We have a supply glut. And what happens in economics when there's too much supply of a product? The price goes down because you got to try and sell it at whatever price people will buy it. But people were already not interested in oil, right? Because we have the demand shock. So those two things together push oil prices even lower. You got a supply glut and a demand shock. Perfect storm for oil prices to collapse. And I said that the Saudis and the Russians, they're out to get the US because US shale producers, our oil guys back at home, domestic producers, they need a certain price in oil to stay profitable. Not even to stay profitable, just to keep operating. If you could pull oil from the ground at a cost of $20 per barrel, then to break even, you need oil at $20 a barrel, right? If it goes below that, all of a sudden, every barrel that you pull out, you're losing money on. And that goes into the fallen angels thesis, because if you can't make money, then you can't pay off all that debt you had to collect just so you could build your rigs and, drill into the ground. And then all of a sudden, all these banks are on the hook for all that money. They can't afford it because their customers who took the loans, the oil companies, they're not paying. Then you have a 2008 banking crisis. But fortunately, our boy Powell, he stepped in and said, hey, there will be no fallen angels as long as I'm here. I mean, look at this picture. Not only does he have the Superman cape, but he literally has angel wings behind him. There's a ray of light shining on his face. The guy's an American hero. But anyway, he stepped in and said, hey, we're going to take care of all that debt. There's no need to downgrade anything. We're going to guarantee everything. But that's not going to stop the Saudis and the Russians. They're going to keep pumping. And it's not like it changed demand. We're all still quarantined. So prices of oil keep dropping. You see it right here. This is the oil futures contract. See how it collapsed? And even right now, it looks like it's breaking lows. Like the actual beautiful gold stuff that you could run through your hands. The price is even lower than what these future contracts are showing. We're about to hit $18 a barrel. It's horrible. But from all this oil carnage comes a great arbitrage opportunity. And this is the type of arbitrage, or really any arbitrage, where it's almost guaranteed money. Because you found a discrepancy in the market. There's a mispricing that you're taking advantage of. So let me show you something. This right here, this red line is the oil futures curve. And because it's curved like this, lower to higher, it's called contango. And because it's curved so much, it's called deep contango. And all that means is that the nearer term oil contracts, so the futures contracts, because futures work kind of like options where there's expiration dates, because there's no actual asset, it's legit just a contract between two people. So the ones that expire earlier are cheaper than the ones further out in time. That's why this curve slants up like this. Now, normally what the curve looks like are like this green and blue curves. So green was 1 month ago and then blue was last year. So notice how the price of the oil stays steady throughout time, or at least more steady. So oil today is worth just as much as oil tomorrow. But now the curve is saying oil today is worth less than oil tomorrow, much less. And like I said, this is the futures contract right now. It's at 18.14. And this is, again, a contract. It's a derivative, so it's not the exact price of oil. The exact price of oil is called the spot price, and that is even lower than what we're seeing here. So here's the arbitrage opportunity that all these hedge funds are going to take advantage of. Well, more than the hedge funds, it's the commodity firms that have the ability to do this, like Glencore. So what you could technically do is buy real oil right now. So say oil is $18 a barrel. You could literally pick up the phone and say, hey, I want to buy this many barrels of oil at $18. And then at the same time as you're buying oil right now, the actual black stuff, like I know the rest of us, we're all trading on markets. Maybe some of us has physical gold, but it's all like electronic. In this case, you're actually buying the real oil. So you can buy that right now and then jump into the futures market where further out in time, the price of oil is actually higher. And you could actually go short one of these oil contracts out here at the higher price. And again, a futures contract is just a contract between two people in its most simplest terms. So if you short a contract, what you're saying is that, hey, I'm going to get into a contract with you where I'm going to sell you this much oil at this price. And this price out here is actually higher than the price you're buying oil for right now. And the thing is, once you make that contract, it's locked in. So they owe you that money when the time comes, but you need to make sure that you have the actual oil to deliver to them. But that's the arbitrage opportunity right there, because you're buying oil for this much cheaper price right now. And then you locked it in that you're going to sell it at a much higher price. So just using simple numbers, say you locked in buying oil at $20 a barrel. So you got a barrel of oil sitting here, you paid 20 for it. And then you agreed to sell it to someone else for 30. That's $10 profit, right? And that's the arbitrage opportunity you get when oil is in contango. It's like immediate guaranteed profit. But here's the thing though, these guys aren't just buying 1 barrel of oil that they can just keep in their basement. They're buying tons and tons of barrels of oil and they need some place to store it, which is why someone like you or me, unless we have those connections and we have a commodity firm, we're not about to do this. Because what happens is when you have all this oil, like I said, you need some place to store it, right? And the place where you store it is in tankers. And that is where we can make a profit because of tanker stocks. So with the big boys that are about to buy all this oil, they got to consider the price in between what they're buying it for now and what they're going to sell it at, and then also the cost of holding it in these tankers. So go back to that example, $20 you're buying it for, you're selling it at 30, that's a $10 profit, but then it might cost $5 to hold on to that oil for whatever, how many years or months. I don't know what the actual contracts are. So if that cost is $5, then you take your $10 profit minus 5, you still got a $5 guaranteed profit. And then the tanker stocks and companies renting out those tankers, they're winning off of that too, because all of a sudden the demand is huge. So that's the short, simplified version of this whole play right here. So if it made sense, make sure you subscribe. And if it didn't make sense, then just comment down below, let me know, and still subscribe. But now let's jump into the actual technical details of how it happens. And I'll go through this kind of quick because it is kind of complicated. And as always, I'm using research from our firm Macro Ops. So you can go there for more. But here's the thesis broken down. So there's too much oil right now, like I explained. Demand has been ruined, which could lead to a 2 billion barrel surplus in 150 days. So the actual storage capacity, like where do you keep all this oil, right? All this capacity that's there on land, the land storage, it's already going to be filled up. And then the rest of the capacity goes into floating storage, like big oil boats. So these tankers are going to get rented out by the Glencores of the world, which is the one I mentioned, like the big commodity firms, because they want to arbitrage the contango that we just talked about. But like I was saying, there's a cost to get this storage, right? So the types of vessels that are going to be used for floating storage are old vessels, like 20 years or older. So they're probably worth around $25 million each. So the owners are going to make a $20 million profit on only a $5 million investment, because even though the tanker is worth $25 million, it's only worth $5 million in scrap value. So you only need $5 million in equity to hold it. So if you pay 5 million and make 20, what is that? You're going 4 times your money. You're 4xing your investment. And anytime you can go 4x on an investment in a year, you're going to do it, and you're going to do it as much as possible. So this is going to take a lot of the older vessels that have been sitting idle out of the existing fleet, because every guy is going to be like, hey, if I could get this awesome deal, free money, then I'm going to do it. So then you could get into all these numbers, but because the demand for tankers is going up, you can make money buying the tanker stocks. And here's a few tanker stocks right here: EURN, FRO. You can see in recent Q&A panels, they're talking about how crazy this opportunity is. Once in a generation situation. It's unprecedented what's happening to the tanker markets. Land storage is going to be filled in the next 30 to 60 days. Then it's going all to the ships. And they're looking at a fantastic Q1 with an extraordinary Q2. Now, obviously, we want to look at some specific names, right? But before we do that, there's some things you got to keep in mind. The biggest thing is that tanker stocks seem like a great value here, but they could become an even better value in the future because oil does continue to drop, and they would become a better value if they drop too. So keeping that in mind, you got to have some type of strategy around this to control your risk. Because yeah, there is an arbitrage opportunity that's getting taken advantage of, but we're a secondary fish. We're still trading in the public markets. It's still investing. You still got to control your risk. We're not getting that free money. So one stock you could look at is LPG. You can see right here that it's coming up to the resistance point of a very short-term pattern. So if it breaks out from here, it might be an opportunity to enter. But then you got the 50-day moving average right here, which may be another resistance. Another opportunity is STNG, Scorpio tankers. And you'll see there's another similar pattern forming where we've got this resistance up above. It just broke through its 50-day moving average, but still needs to break through here. And then you might have a potential opportunity to enter. And we even got earnings in 4 days. So that might be the catalyst that has this explode higher. And lastly, we could look at TNK, which is TK tankers. And here, as you can see, there's not much of a pattern. So if you were to get in here, maybe you could put your stop at the 50-day. It really depends. And here's the thing, these are all volatile stocks. So you absolutely need to make sure that you have a stop in place. And because they're so volatile, what you might want to do is take a smaller position and then widen your stop. Because we all know it sucks when you put a stop in and the stock drops and touches it, hits it, so you're out and then rockets off. But in a stock that's going like this, that tends to happen, which is why you can still get a position, just size it smaller and then expand that stop. And then as the position slowly starts working in your favor, you could add more tranches to it. But you can wait for that initial confirmation, because in volatile stocks, there tends to be a lot of false breaks. You think it's about to go and then it comes back, which is fine. That's a part of the game, but you need to make sure that your strategy around these stocks, accounts for that. So that's normally what we do at MacroOps: smaller position size, wider stop. And all this position management, investment management stuff is exactly what we talk about in Strategy Builder Pro, because there are a lot of different ways to play a stock, and the way you play it matters a lot. So first, yes, the way you play it, you need to make sure that it makes money, but for it to make money, you also got to make sure that it matches your personality so you can actually follow it. So we teach multiple methods in this training program so that you can put together what will work best for you. And we show you how to put together all the steps, because you need a stop, then you need a target, then you need the right position size, then you need the right time frame. So like with these tanker stocks, if you're betting on a big thesis like this, a lot of the times it's very hard to time exactly perfect. Much of the time when you're trying to do a thesis like this, it's pretty tough to time perfectly. So if that's the case, maybe you do have a small position, wide stop, but then you have a time stop as well. Where you're like, okay, if it doesn't play out in the next 3 months, then I'm just going to remove all my positions. So that's another way to play it. Or you could play it the technical way, like I was saying before. Oh, okay, it breaks this resistance line. Oh, here's the 50-day, here's the 200-day. I need this to happen and then this so I can do this. It really depends on how you want to do it. But once you decide, once you have the plan in place, then you need to stick to it. You can't get into a position saying, okay, I'm going to have a technical stop in place and a technical target. Then in the middle of the trade, it's not working out the way you want it. So you're like, oh, I'm just going to do a time stop. Oh, no, never mind. I'm a value investor now. Oh, I put that rule in, but I didn't really mean it. Let's change it now. So that's why in Strategy Builder Pro, we not only go into how to build a strategy so that it will work the best way for your personality, but then also we get into the psychology of how you follow it. Because really the most important thing is that you build a strategy that you can actually follow day in and day out and that you're comfortable with. So click that link down below in the description and comments to check out the program, because we are closing it Sunday at midnight New York time. We only let in so many people at once because our team is only so big to assist everybody. And now is a great time to be in the market. It is wild. There's a lot of money to be made. It's been fun, but it can also be disastrous if you don't have the right strategy in place that is managing your risk. Because that's always the number one goal. Manage your risk, don't lose money. And that's especially true when you're dealing with volatile stocks like the tanker stocks, because they can be very lucrative. They might take off very soon actually, but make sure you have that strategy. Strategy Builder Pro can help with that. And if you like this video, make sure you subscribe. We got more coming. I will see you in the next one. Stay fallible out there. Bye.